for a very long time, we've had most Africans be consumers in the whole Web3 space, but now the narrative is changing. You know, we are having guys building very magnificent products that Africans are able to, you know, use it. Today, I have a very, very great gentleman with me, and he and his co-founders, they are building something great. They are also part of those that are changing the narrative. So we're going to have a conversation with him, and then we take it from there. My brother, how are you doing?
Nice to meet you, Monty. I'm great.
Yeah.
An intro about me. My name is Paul. I am the co-founder of Daya. Daya is a stablecoin neobank and infrastructure business for businesses in Africa. So, what are we trying to build? The way money moves is changing, right? Stablecoins have reinvented how fast you can move money, how efficient you can move money,
Yeah.
and the majority of this adoption is in Africa. I always like to say, like, Theta found their product market fit mostly in Africa and other emerging markets early, when people in this country realize, oh, they can save they can save in USD,
Yeah.
they can transfer money much faster and
Yeah.
at a much cheaper rate. Even though like Theta doesn't pass yield, it is still got a lot of use. So with Daya, we are building like a stablecoin neobank, but we are starting with businesses for the Daya business, and then we have Pro by Daya, which is our retail consumer app, and basically we want to enable like businesses across Africa to move money efficiently across borders. For example, even we like the legacy system, right?
Yeah.
Let's say a loan over $1 trillion was moved in cross-border payment, and I think like stablecoins are just going to make this much more efficient. My co-founder Aleph was a product manager at Cycle, so he worked at Cycle on USDC, and he left Cycle, and I also was working for a venture firm in London called Relic Ventures.
Right.
So both of us left and started Daya together late last year. We then went through the Alliance program where we learned a lot, and we are just like starting to build out. We are doing this in a very regulatorily compliant way, right? So that's why we have been getting our licenses and getting our house in order.
But let me ask, even before the whole stable coins and all of that, what do you think are the major problems that African businesses are facing? Like what's the predominant challenges that most African businesses are facing in terms of payments and all of that?
Okay, so first of all, we have to start like with like some large businesses and local businesses that are doing business in Africa. First of all, a majority of these businesses import most of their raw materials or their goods from like other countries. Let's say, for example, China. Let's say, for example, the United States of America. When these businesses are sourcing this good, they also need to make payment, right? They need to pay the suppliers. And like in a lot of African countries, including Nigeria, where I am originally from, there's like capital control, right? For example, there's a 3,000 US dollars limit on my Naira card, which means that if I want to pay my suppliers in large quantity, I have to source like $4. Most times I have to go to banks, which is a long process. The fees are extremely expensive, and it's just like a slow, archaic process, and that brought about like the prevalence of something called barrier de change. They are called BDC in the black market. So what a lot of these businesses do is very opaque. Now they just go to different vendors and they get USDT dollars, they get etc., and then they pay their vendors. So one is inefficient payment system for cross-border trade. I used to say like internally Africa has one of the most efficient local payment corridors. Mobile money is very efficient in Ghana and East Africa. And like the Naira bank transfers in Nigeria are extremely fast. Like in seconds, you can just move money. The issue usually comes when you have to pay outside of the
cross-border payment.
So this is what we are trying to solve.
Wow, interesting. But you know, another question that I mean, when I heard of Daya, and one of the things that came across my mind, I was like, I mean, bro, look at the volatility of the local currencies. Like we're talking Naira, we're talking Ghana City, we're talking shilling. Like it is really not stable. How are you guys able to balance all of this with the local currencies not being very volatile?
So one of the things one of the reasons why we build Daya is for this, like one of the reasons why there is no like proper price mechanism and why these currencies are very volatile is because like all of this process is very opaque, right? And I think like one of the things that this infrastructure and stable coins as they mature are going to do is they are going to bring more stability and liquidity. So the core issue of like most of this is like, how are we going to solve like this volatility issue? One of the things we are doing is like our rate are like, you know how it moves daily, and there's also the central bank regulations and all of that. what we do is like we give you a quote daily, and we are able to like lock in that quote for 24 hours most times.
Oh.
And when that changes, we are also able to quickly follow up, and all of this is done like automatically.
Okay.
One of the cases that I personally have, like as we build out and more like more liquidity come for local naira stable coins, for example in Nigeria there is CNGN,
Yeah.
like maybe a Ghana CDs,
Yeah.
etc. There'll be more liquidity, which will make for more efficient price discovery, and like most of this volatility will reduce.
Yeah.
For example, now the Ghana CDs has been much more stable than
Yeah.
the naira for quite
Yeah.
a while, and I think this is due to better liquidity and like all of these mechanisms. So yes.
Interesting, but on the issue of compliance, though, I think
Yes.
it's been one of your headaches, right?
Yes,
I mean, you
yes.
and your co-founder, I think you guys have been trying to wrap your head around that. How challenging has that been?
So Aleph is a second-time founder. I also work in a startup called Bitcoins, which is one of the earliest crypto exchanges in Africa. And one of the most important lessons we learned there was like how important it is to be regulatory compliant from day one.
Very,
right?
very crucial.
So like it's more preparable you build with these regulators on your side from day one, right? So you get approvals, you get the licenses. If you run into problems, you can go to them. Compliance is very, very so important to what we are doing at Daya, even though like navigating compliance in Africa can be quite difficult, right? Because like we have 54 different African countries with different set of compliance. For example, I'm currently in Ghana, like closing out our compliance registrations and all of that. We have already done that in Nigeria. We are going to be doing that in South Africa. But what is going to be quite helpful is like when the Pan-African payment system come in, perhaps. This means that you are able to do like compliance in a few African countries, and that gives you the regulatory cover to do all of this across the continent, right? So I think being regulatory compliant and working closely with the regulators is a much better way to build, especially seeing that this is a new technology, right? True. So we want to let the regulators and the compliance people know, hey, we are not doing anything illegal. We are not the ones making the currency volatile. We are just providing efficiency and better liquidity and better price discovery and just like a better way to move money. So I think like what the internet did to like most businesses is what stablecoins will do to money movement, and I think this is going to be like 10x. So if it is 1 trillion last year, I think with stablecoins efficiency is going to be 10 trillion plus over the next few years.
Interesting. I'm sure you've been following what is happening in the US with the Clarity Act and all of that, and you see banks and companies like stablecoins going back and forth. There's been a lot of woof. Do you think we're gonna see something, or we are currently seeing something similar here in Africa? Like you have banks not wanting to adapt, and you guys also coming in with your ingenious ideas and problem-solving technologies. How is the competition like? Is it healthy with banks and products like what you guys are building?
Thank you. That's a very, very good question. So like in our market, there are two particular type of this. There are like the forward-facing banks. I'm not going to mention some names that are like very open to this. We have like a couple of partners that we are working with to build like some of this on-ramp and off-ramp infrastructure. So there is like better efficiency. But then there are some of the older businesses that think, oh, this is a passing fad, but I don't think they realize how critical this technology is going to be to the way all of their business is conducted. Like you mentioned in the US, like if you allow stablecoin yield, you're literally killing the banking business model and the banking cartel. Crazy. So that's why they are fighting like heavily to prevent that. Thankfully in Africa, like there's like, so for example, in Nigeria, there's what we call the BSAP now, which is the licensing regime for allowing you to operate stablecoin businesses. In Ghana, the BSAP just went into law. They just signed it. This is what I'm here doing for Daya also right now. And like in Kenya, they already have passed one. Rwanda is working on one. South Africa already has a BSAP regime. So thankfully, like there is clear regulation for you to compete with these banks, right? So you can be able to build this product. Your regulatory compliant, you're regulated either by the SEC or the central bank of that particular country. And for now, I think most of the banks are just like ignoring us, right? Because a majority of this cross-border payment is still going through this banking.
Yes.
So like
they're not feeling it.
Yes. So
we'll feel it very soon.
so only about like 5 to 10% have moved about these
Yeah.
banks. For example, like
Yeah.
Nigeria, which is the largest stablecoin market for cross-border payment, just did 20 billion all of 2025, right? But now those banks process like 200 billion plus that year alone. So like
So,
yes,
huge gap.
so once this business realize, oh, stable coins is just a better way to keep your money and move it, then they are going to start moving out of these banks. And then also a lot of African businesses are very, very conservative. So you
Yes.
have to do like a lot of work educating them and
Yeah.
showing them how to do this. So there's a funny story. One of our earliest customers is like a very traditional conservative business. And when we started talking to them and they were like, oh, Bitcoin. I won't touch Bitcoin. And we're like, oh no, it's not Bitcoin.
It's a
You are using
stablecoin.
stable coins. The currency is not fluctuating. You're not going to lose all of your money
Yeah.
because you're using stable coins. So we are doing like a lot of this education with these local businesses, and the banks have not even realized how much of a threat this is to their business model. But I think 2 to 3 years from now, as the market matured, as compliance become ready, and as a lot of these businesses get educated and move to more efficient rails, we probably are going to have a fight on our hands similar to the one that is already happening.
Absolutely. It's getting interesting. You know, one of the major challenges by African founders and builders is funding.
Yes.
And this is something that you guys have seamlessly been able to sail through. Like, I'm not saying you guys didn't struggle, but you know what I mean, right?
Yes.
What do you think these founders are not doing well? I mean, you guys have been able to raise millions of dollars, right? What do you think local founders are not doing right that is not making them attract the right VCs or angel investors and whatnot?
So most like one of the things that is very, very important when it comes to raising, especially when you're talking to VCs that are not familiar with your market, is you have to do a lot of market education. Thankfully, like most of the VCs that we worked with and that like participated in our pre-seed, like they did a lot of market education, right? Like our leads, we have no analysis, so I can call them, but they did a lot of work understanding the nuances of the market, understanding where the volume is, like, and it was really like a tough process, even for us that are like very familiar with this market, and with all of our experience building this product, we still have to do like a lot of convincing about where the market is going. But thankfully, there have been like other like front setters like Yellow Card and Flutterwave that have built very successful fintech businesses.
That's true.
And like, if you can do the work of looking at the on-chain data where most stable coin volumes are going, you'll see that most of this trade is going through the emerging market corridor. And so, one, the founders must know that if they are talking to VCs that are not familiar with their market, they must do a lot of market education. They must have all of the data points that are relevant to their business, their revenue model, what compliance and regulation look like. So one of the issues people keep asking, oh, what happens if regulation change? And thankfully, like, we're very happy that just when we're fundraising, all these licensing registers are
falling in
starting
place.
BSA, all of that. And we're so happy because we're like, oh, there is clear regulation.
Yep.
This is what we need to do to operate. Secondly is finding the right partner for your business, right? Most
partners.
VCs are not the right partner for your business, right? So there are some VCs that have like, if you're building a stablecoin business, I would suggest like working with VCs that have very strong stablecoin thesis. Then you don't have to start everything from the beginning, because before you start talking, they already understand what you're talking about and what stablecoins do. If you're building like a direct B2B, you go to a fintech specialist, etc. And then 3, like you need to have like a strong business model, right?
Ooh.
It's so much harder to raise as a founder in Africa than a founder in the US.
That's
because
true.
like our market is not as matured as the US market, and we don't have as much liquidity in the African market, and there have not been like so many exit that VCs will say, oh, there's a pathway to exit. So yes, it's really difficult, but it is doable, as me and my co-founder have done. It just requires a lot of work. And also, like, you should talk to other founders that have successfully been able to raise, because yes, it's a learning process. We face a lot of rejections. We did too, but like once you have a couple of years, then it becomes easier to move from there.
We're wrapping up. I want you to tell us the future of Daya. I mean, where do you see Daya? What, next 5 years, next 3 years? That's a cliche, right?
Yes.
But you tell us. I mean, where do you think we are going with Daya?
So with Daya, we want to build like the most important financial infrastructure across Africa. We want to be able to let Africans and African businesses seamlessly participate in trade all over the world. We want to 100x, 1000x the efficiency of moving money for both individuals and across Africa. And we want to build like $100 billion business plus over the next 10 years.
$100 billion.
And so like one of our North Star is like, want to grow fast, want to do it in a regulatory compliant way, want to build like a solid financial infrastructure business for African businesses. So yes, that's where Daya is going in the next few years.
Guys, make sure you follow Dier. So I'm gonna tag the handles and everything, all of there. But Paul, it's been exciting talking to you,
It
my
was
brother.
great talking
Thank you
to
so
you.
much.
Right,
It was hard getting this gentleman, but we got him here.
Yes, it's great. And I'm having a good time in
Yeah.
Ghana.
Bro.